Okay, the Ichimoku Cloud. This is a trend following indicator, much like a moving average. It just looks a little more advanced. It actually gives you a unique type of support and resistance, along with showing you the trend. Oftentimes, traders that use this indicator will only put this indicator on their chart, as it can be sort of overwhelming, because there are 4 parts of the indicator. First is the conversion line. This is a lot like a faster type of moving average. It follows the candles the closest. It gives us minor support and resistance levels with the trend. It is calculated by using a 9-day high and adding it to a 9-day low and then dividing it by 2. Next, we have the baseline or confirmation line. This measures a medium support or resistance levels. This is calculated much like the conversion line, being a 26-day high plus the 26-day low and then divided by 2. These 2 indicators, as you see, work much like a moving average. When the conversion line is above or crossing the baseline, it is a bullish signal. And when the conversion line is below or crossing the baseline, it is a bearish signal. Next, we have the lagging line or lagging span, which can be considered an even slower moving average. This can be used as a support and resistance level or a confirmation level. The lagging line to the current price 26 candles back. So on a daily chart, it essentially shifts the price back 26 days. It helps you see how strong a bullish or bearish trend is. In general, if the lagging line crosses under the conversion or baseline, it is a bearish signal. And if it crosses above, then it is a bullish signal. Just like using a third moving average. Lastly, the most popular part is the cloud. There are 2 lines that make up the cloud. These 2 lines are called spans. We will call it span A and span B. Span A is the conversion line plus the baseline divided by 2. In an uptrending market, span A should be above span B, which is the 52-day high plus the 52-day low divided by 2. In a downtrend market, span B should be on top of span A. To make all these make sense to you, I want you to think of these like typical moving averages. Remember talking about the 20, 50, 100, and 200? Well, in an uptrend, they should stack up with the 20 on top and the 200 on bottom, and vice versa for a downtrend. The Ichimoku Cloud is much like this, starting with the lagging line at the top. Because it is not a moving average, it is simply shifting the price. This should be the top line. Then the conversion line, because it uses the high and the low of the last 9 days. Then the baseline, because it uses the high and low of the 26 days. Then span A, and lastly, span B, being the very bottom line. Let's talk about some of the possible ways to be using this indicator. One way a trader might do a trade is trading the conversion and the baseline crossover. Another important factor would be the lagging line. If the lagging line is above the price action, indicating an upward trend, and we have an upward conversion and baseline crossover, it could be a good crossover entry. The same type of idea could happen if we get a conversion baseline crossover while it is above the cloud. Another simple way is to trade the candles crossing over or below the cloud. When they cross below, it is a bearish signal, and when they cross above, it is a bullish signal. Of course, it could be helpful to look at where the lagging line is as well. Some traders will actually use the cloud as a support level if it has shown a strong bullish trend, or as a resistance level if there is a strong bearish trend. You can also use the cloud crossover as a buy and sell signal. When the span A crosses over B, that is a bullish signal. It is an even stronger signal if the price action is above the cloud, indicating a stronger trend with a crossover signal. If you get the cloud crossover while the price action is below the cloud, then it is a weaker buy signal. As you test out the Ichimoku Cloud, I want you to remember it is a trend indicator. If a stock is not in a trend, it will likely give you a lot of false signals. With the description of each line, I hope you can identify a trending stock and be able to use the cloud accordingly. All in all, the Ichimoku Cloud is an awesome indicator that gives you a ton of information, maybe too much information. You can even use this indicator by taking off some of the lines. I know some traders that only use the cloud part of this indicator. Just remember to test things out before you start using your real money and start creating your strategy. And I'll see you in the next video.